Hi friends, Angie here with some more breaking news for us pensioners that I've promised to keep you all up to date with. You will always find the latest news for pensioners and those saving for retirement on this channel, and it will include ways to help you get through the problems that hit us. Did you know that this last week thousands of pensioners across the UK have been hit with shock tax bills of £10,000 or more, all because of the way HMRC applies emergency tax codes to pension withdrawals. In today's video, we'll break down the reasons for this, but more importantly, how you can claim back your refund. Here are the main points that I will deal with in this video. Number 1, why this keeps happening. Number 2, who's most at risk. Number 3, the staggering amounts pensioners have been overcharged. And 4, the new HMRC reforms that came in during April 2025. And most importantly, I'll be dealing with how you can claim back your refund and stop losing thousands of pounds. So stick with me until the end. I'll give you a clear step-by-step guide. First, let's look at the root of the problem, namely emergency tax codes. Let's start with why this happens. Since pension freedoms were introduced in 2015, people aged 55 and over can take money out of their defined contribution pensions whenever they like. Sounds flexible, right? The problem is HMRC's tax system isn't built for this flexibility. No. When you take out a lump sum, HMRC often doesn't know your full tax situation. So what do? They use an emergency tax code which assumes the withdrawal you made is a monthly payment. Let's look at an example. If you take £10,000 out in one go, HMRC might assume you're withdrawing £10,000 every month. That's £120,000 a year. And here's the problem. They tax you as if you earn that much, even if you don't. So that's how so many pensioners end up overcharged. Secondly, let's look at the scale of the overcharging, because the numbers are eye-watering. In just the last year, around 60,000 pensioners had to claim refunds for overtaxation. That's about 20% more than the year before. Even more shocking is that nearly 2,500 pensioners were overcharged over £10,000 each, with a handful even having to claim back an eye-watering amount of over £100,000. In fact, since 2015, HMRC has refunded more than an unbelievable £1.4 billion in overpaid pension tax. Experts are calling the system indefensible because pensioners should never have to loan money to HMRC and then fight to get it back. Thirdly, let's bring this awful situation home to us with some real pensioner stories by putting a human face to this. Imagine George, 67, who takes out £20,000 from his pension to pay off his mortgage. He expected to be taxed at his normal 20% rate, but instead he was hit with a £7,000 tax bill. Or Mary, who's 62. Now, Mary withdrew £15,000 for home renovations. HMRC assumed she was taking £15,000 every single month. She lost almost half in tax up front. Both George and Mary did eventually reclaim their money, but only after filling out forms and waiting weeks for what is in effect a loan to the government. Now, for many of us pensioners, this is stressful, confusing, and deeply unfair. In the fourth part, I want to take a look at HMRC's response and reforms. And the good news, HMRC has made changes. From April 2025, the system did finally switch from emergency codes to cumulative tax codes. But what does this mean? Instead of taxing you as if one withdrawal is a monthly income, HMRC will use your overall yearly income to calculate the right amount. But while the good news means this should massively reduce the risk of overcharging, the bad news is the catch. On your first ever pension withdrawal, the system still might not have the right code. That's right. So even after 2025, some people will still be overcharged at the start. That's why knowing how to claim a refund is crucial. So let's move on to the last fifth part of this video. So here is a step-by-step procedure on how to claim your refund, which is the part you've been waiting for on how to claim back what you're owed. And I'll break it down into the category that affects you. Number one, if you took only part of your pension and will take more later, use Form P55. Number two, if you emptied your pension pot and have other incomes, use Form P53Z. Number three, if you emptied your pot and have no other income, use Form P50Z. You can find all of these forms on gov.uk. Once you submit online, most refunds are now paid within 30 days. And here's a tip. To avoid massive overcharges in the future, I do suggest strongly making a small withdrawal first. That helps HMRC apply the correct tax code before you take a large amount out. So the lesson is simple. Keep what's yours and don't let HMRC's systems eat into your retirement funds. If you've recently taken money from your pension, check your tax code. If the numbers don't look right, you could be owed thousands of pounds, and reclaiming it is your legal right. Thousands of us pensioners have already reclaimed life-changing sums. Please don't miss out on what's rightfully yours. If you found this video helpful, please do hit like, share it with friends and family, and subscribe for more clear guides on pensions and retirement. Bye for now, and take care to keep what's rightfully yours.